Okay, our topic today is health insurance. So I've pulled up, this is Select Health's website, okay, and I'm going to show you. This would be for a family of four, okay, and I did some. Look, I did Fred, Wilma, Pebbles, and Bam Bam are the four people that are on this plan, okay. So that would be a family of four. This is a medical plan. Okay, and we're going to talk a little bit about health insurance. I want to show you some of the things. Now, the terms that we discussed last time are going to be things that you're going to want to be aware of here. So if you haven't done the insurance lecture from last time, make sure you do that first, because some of these terms from that lecture are going to be important to understand in this one. Okay, here you'll see your first one, deductible. Okay, we defined deductible last time as the amount the customer pays before the insurance coverage kicks in. So, well, the way that Select Health does it is they have bronze, silver, and gold plans. And I'm going to scroll down and show you a silver and a gold here in just a second, okay? But this bronze plan, your deductible amount is $8,150 per person, okay? And then the second number is per family. So $16,300 for the family. So you're not going to have to meet that $8,150 deductible for every single person in the family, because if it happens to more than two people, if there's multiple people that get ill, if you've met the family deductible of $16,300, then you're good. But now, I want you to notice the premiums for this policy, and these are entry-level premiums for this policy, okay? The premium for this plan would be $1,106, and that's on Select Health's what they call their Med Network, which includes about 6,900 plus doctors and facilities, or hospitals and Instacares. Okay. Select Value has a smaller network of doctors and hospitals, and for this plan, on the Select Value plan, which would be 5,100 plus doctors and hospitals or Instacares, your monthly premium is going to be $978 a month. So this is why health insurance is such a controversial topic in our country, okay? This is a plan that is not, you have to pay $8,150 out of your own pocket before the insurance even kicks in. Okay, and yet you're paying about $1,000 a month, depending on whether you're on this network or that network, a month for this plan. Okay, now that's the deductible. This is a term that we did not cover last time that I want you to be familiar with. It's called max out of pocket. Okay, and so if you need to pause the video and get this definition down, go ahead. But max out of pocket is the maximum amount a customer will pay on claims in a calendar year. So, the maximum amount a customer will pay on claims in a calendar year. Make sure you get that down. Now, in this case, the max out of pocket, you'll notice, is the exact same as the deductible. So once you've met the deductible, you've met your max out of pocket. So if you meet your max out of pocket, you're not going to have to spend another dime the rest of the year. So I got a friend who's a nurse anesthetist, and he puts you to sleep for surgeries and helps moms when they have babies with epidurals and things like that. And he says that their busiest time of the year is November and December, because people have met their max out of pockets, or they've met their deductibles, and now, hey, like, is there anybody in the family that needs something done? Because, hey, if we're going to do it, let's do it right now, so that we don't have to pay anything for it because we've already met our deductible, or we've already met our max out of pocket. These aren't always the same. I'll show you that here in just a second, okay? This plan does not include co-pays, because you're going to meet the deductible. Once you've met the deductible, you've met your max out of pocket, okay? That has no co-insurance, because, again, once you've met your deductible, you've met your max out of pocket, so there's no co-insurance after you've met that deductible. And there's no prescription drug deductible, because, again, everything's going to go towards that deductible amount. So if you had a catastrophic year medically, I want you to consider how much this would have cost you. Okay, just take 1,000 times 12 months, that's $12,000, and there's another $8,000 to meet your deductible. That's $20,000 out of your pocket that you're going to have to pay if you were to have a catastrophic year. Okay, so when you see this being debated politically, there's two major issues that we face, and one of them is it's very expensive to provide insurance. And so the premiums are really high. Most people have their insurance through their work, okay? But I want you to consider now, okay, you're a small business person, you're trying to get a business going, okay? And do you provide health insurance for your employees? Do you provide it for your family? And it becomes very expensive to provide that for your employees and for your family, okay? All right, now I'm going to go back to the computer. I'm going to go off camera for just a second, and we're going to scroll down and look at a different plan here, okay? So that is a bronze plan there, and we're going to scroll down and we're going to look at a silver plan here. And so here's your first silver plan. So let's look at that one, and I want you to notice what the premiums have done, okay? Look at your premiums there. Okay, you're now at $1,621 a month for your Select Med network. You're at $1,434 for your Select Value network. Okay, and what does it cover? Well, you still have a $3,100 deductible per person, $6,200 for the family. Okay, but I want you, the max out of pocket is the same as that bronze plan was. Okay, but you're going to meet the deductible. And then these copay amounts and this coinsurance, actually the copay, you'll notice you don't have to meet your deductible for that. So if you go in for a routine doctor visit, you're just going to pay $35 for your primary care physician. That second number is if you go see a specialist, okay? So you would pay $60 if you were going to see a specialist, okay? Coinsurance, remember we talked about last time, coinsurance is when the customer and the insurance company share in the cost of a medical claim. Well, after you've met your deductible, then it's going to be 50-50 after that. Okay, so if you have a surgery that costs $10,000, you're first going to meet the deductible of $3,100. Okay, and then you've got a balance of $6,900 left. You'll pay 50% of that. The insurance company will pay 50% of that. Okay, and your prescription, you have a $1,000 deductible on prescriptions. Now that is going to go towards your max out of pocket, okay? But that's a separate deductible that you have to meet outside of the medical deductible, okay? So you have to consider that as well, okay? So again, monthly premium for this is $1,621 a month, $1,434 if you're on a smaller network of doctors, hospitals, Instacares, and other facilities. Okay, so that's, you know, you can see it's very expensive. This is a better plan. It's still fairly high deductible, still fairly high max out of pocket. Okay, let's go look at what a gold plan would be. Okay, this would be, you know, one of their better plans that they offer. And so if we scroll down and we look at the gold, our gold plan down here, you'll look at the premiums for that one, okay? Your Select Med network is going to be $2,000. I'm looking at the bottom one here. Okay, $2,339 a month. Okay, and $2,070 a month on the smaller network. But here's where the network matters. I don't know if you guys, if anybody's ever been involved in an accident where you had to be transported by an ambulance, they'll usually ask you, hey, which hospital do you want to go to? Or they'll ask a parent, hey, which hospital do you want me to take them to? And that matters because if you go outside, so this is the network of doctors and hospitals that's available to you. Okay, if you go outside of that network, it's going to cost you more. It's going to be more expensive if you go out of network. Okay, and so you have to generally go in network. If it's a life, your life is on the line. Okay, if it's a life-saving emergency, they're not going to ask you what hospital. They're going to take you to the nearest hospital and save your life, okay? But, you know, if you've had, you know, an injury and they're transporting you from, you know, in an ambulance, then generally speaking, they will give you the option of choosing a, oh, what happened to me? They're going to give you the option of choosing the hospital that you go to so that you can try to stay in network, okay? So that's you know what it's expensive, right? So I mean, health insurance is a very controversial subject because it's so expensive. If you want me to, you guys got to come on and join me TikTok on Monday and Wednesday mornings. Then you can ask me questions on the TikToks, and we discussed this morning. Hey, what are your thoughts, or what do you think about a national health care plan? Which is, you've got different presidential candidates. You've got Bernie on one side who says, hey, we want a Medicare for all plan, and so the government provides insurance for all citizens, okay? And we get rid of the private insurance network. And you know, if we're looking at party, Democrat versus Republican, Republicans are more, no, we want a free market system. We want to, you know, create more competition in the marketplace. And we think that that will help drive premiums down. And so those are your two opposing points of view as to how to solve this problem, okay? I'm a free market guy, okay? And when you look at our current system is broken, and anybody who denies that, they're not looking at the reality of the situation. The one thing that I do think is great with our system, we have some of the greatest doctors and hospitals in the world. And so in terms of providing care for people, we are providing outstanding care to our patients, okay, and in a timely manner. But the costs of doing that are outrageous, and so we have to look at how we can drive costs down. Prescriptions, for example, in Canada and Mexico are significantly cheaper than they are in the United States, and that's because you've got a little bit of a mix of, you know, insurance companies and drug companies and medical providers that are kind of in cahoots, you know, with, we'll go conspiracy theory, but with the government. And so it's not the free market really going to work. So there are definitely issues going on right now with our healthcare system, okay? You know, those are not really your only two options, but those are two of the options on the table. Is, you know, hey, we move towards more of a national health care plan. Obamacare took some steps towards, you know, more of a national plan, and then, you know, the other side says, oh, hey, let's try free market principles. Okay, one thing that recently happened that I'm curious to see how this plays out, but President Trump recently approved legislation that says, hey, we will allow U.S. companies to outsource their drugs. If you want to go, if an insurance company wants to go to or have a Canadian company, if they want to purchase their prescriptions from a Canadian or a Mexican company, we're going to give them permission to do that. I like that idea, because if you're a medical provider and you want to drive down the cost, and the American drug companies are charging $1,000 for this prescription and a Canadian company will charge you $100, then go buy it from the Canadian company. And then in essence, what's going to happen is the American drug company is going to have to do one of two things: either lower their price or go out of business. Okay? Because nobody in their right mind is going to pay the $1,000 for the same drug that you can get for $100 somewhere else, right? So if we open up that market and say, hey, you want to go get the drug from Canada and do so legally, you go for it, okay? And I think that's a free market principle that I think could help drive down the price of prescriptions. So, you know I got friends who are diabetics or have kids that are diabetics, and you know insulin is an expensive drug. So how do we drive down the price of insulin? Okay, in the state of Utah recently, they passed legislation that put a cap on what customers pay for insulin. So be interesting to see how that works out too. And again, I don't know that I like that idea, because that's the government telling the industry what they have to charge. You know, that's not necessarily a free market principle, but we'll see. So there is, you know, quiz. Let's talk about the quiz for health insurance, for a health insurance discussion. Okay, I'm going to ask you just a few questions on there, and what I want you to do is just some of the things that you thought were interesting about this health insurance discussion. I want you to note those down. Okay. I think one of my questions, I'm going to ask you about max out of pocket. I gave you the definition for max out of pocket. The other ones are really just going to be, what are your opinions? What did you learn? What are some of the things that you found interesting about our health insurance discussion? So, hope you're staying safe, staying healthy. Hopefully we get to see you back here in school sometime in May. But good to not see you, but interact with you in some way. I do like the live. I like the live TikTok. So if you want to come in and join me there, I'd love to have you come in and join me. It's a little more of an interaction, a back and forth, where you can ask me some questions and we can have more of a discussion. I've been trying to record while I TikTok, but it sometimes doesn't work out. So anyways, be safe and be rich.